Hello and welcome back to the Coreco Couch. Now, we have had some great guests and some really interesting topics so far, and we've got loads and loads more planned. We are delighted to be joined by Narinder Gill, who is our senior buy-to-let expert at Coreco, and he knows everything there is to know about buy-to-let and landlords. And that's why you're sitting on our couch. Welcome, Narinder.
Thank you.
How is the couch today?
Very comfy.
Nice and comfy. This is our new living room.
That's brilliant.
So there you go. You're the first guest we've had in this new area here.
Honoured.
You should be honoured. But we're here to talk about buy-to-let, and it's quite interesting when we talk about buy-to-let. If you believe the press, and we've all seen the stuff that's in the papers around buy-to-let is dying, landlords are evil, all the tax changes that have happened, everything that's happened is all about bashing landlords. So is it true that the buy-to-let market is sounding a bit like it's on its knees and going into a bit of a death knell?
I wouldn't go as far as to say it's dying as a market. I think there's a lot of activity in the market at the moment. It's very buoyant. There's just been a big change in the lending landscape. And that's something now that landlords, brokers and lenders are all getting accustomed to, and certainly for the short and foreseeable future, not looking to change.
Yeah. It's been interesting actually, because I haven't seen that either. I'm just playing a bit of devil's advocate here. So what are you seeing then? Because we've seen different types of landlords. So in the past, I used to call them dinner party buy-to-let landlords, where you go to a dinner party and everyone will be going, "Oh yeah, you've got to buy a property, you've got to rent it out. It's the future. It's a way to make money." What's happened to them?
Good question. I mean, those, we call them accidental landlords or non-professional landlords, they've done well. They've done well over the years. They've seen capital appreciation and benefited from, at the time, tax allowances and reliefs to make, as a small business on the side, quite a profitable investment for them. What I've seen and what we're continuing to see is regulatory and tax changes within the market, which are almost pushing out the accidental and non-professional landlords, allowing the more corporate landlords to take advantage or cement their position within the market.
But we've seen, we're in a place where property is still quite scarce. There's undersupply, there's over demand. Lots of people want properties, not just to buy, but also to rent and to live in. Yeah. So we've seen a period where rents are increasing pretty dramatically. Are you seeing evidence that actually there are new landlords starting to want to come into the market? And if so, what tips would you give anyone who might be watching, who's thinking about going into buy-to-let?
Definitely, there's plenty of opportunity for new landlords. We've seen pockets of the UK, typically those in, say, university towns where there's a high concentration of rental properties, where the landlords or the historic or legacy landlords that have held typically properties in their personal name are now selling up. And we're seeing a lot of inter-landlord sales. Yeah. Which is really interesting. But that leads me on to some of the tips and advice pieces that we, from outset, discuss with clients, and that structure. It's very important to seek correct tax advice. I wouldn't say holistic tax advice, but personalised tax advice on your own background. You will have personal income typically in the background that will need to be factored in, and we are very often seeing individuals now buying properties in a corporate structure, right? So an SPV.
Okay, so that tax advice day one is the most important thing.
Yeah. We'll highlight that, if we could get a sense or gauge that a client's maybe not engaged with an accountant or tax advisor, we'll very quickly ask them to understand the ramifications of holding, say, in personal name against a company name.
And the process of someone new getting a buy-to-let mortgage, is that massively different from getting a mortgage generally on your main residence?
Oh yes, very much different. So the loan itself will be derived and backboned by the rental income of the property.
Mm.
Some lenders will have more of a vested interest in a client's personal financial circumstances, i.e. how much income do they hold in the background in the event, say, there's a rental void period. And we have some lenders who, say, for the more professional or experienced landlord, can remove those minimum income requirements. But again, those are typically steered towards more of the corporate held properties.
Yeah.
And those individuals, say, with larger portfolios or income that they themselves derive in a limited company and draw, say, maybe a small salary in dividends.
Most lenders want to see a minimum income of, say, 25,000, and then basically the rest of it is derived from the rental income that you're getting. Something that I know has been prevalent in the mortgage market as a whole is a whole concept of stress testing, and that's really important in the buy-to-let market in terms of determining how much people can borrow. Do you want to just talk us through what that stress testing means?
Stress testing is very interesting, and it's coming to the forefront of not only brokers' eyes over the last couple of years, but also individuals and landlords themselves, as typically in the past there hasn't really so there's always been there, but it's never really been that much of an issue.
Yeah.
And now with the increased costs of borrowing that lenders are passing
because
on,
interest rates have gone up. Yeah.
There's a whole myriad of increased costs, be it on the fees or on the pay rate of interest.
Right.
So going back to the question of stress testing, it's very simply put a mechanism that lenders will use to determine whether or not that loan can be serviced correctly by the rent.
Right.
And or the rent alone.
Okay. And does that depend on certain things? So does it depend on, I think it's higher if you're a higher rate taxpayer, or it's lower if it's a limited company? And are there any other things it's dependent on?
So lenders will stress test typically at 125% coverage in a limited company, and higher rate taxpayers will be calculated using, say, 140 or 145%. And lenders do that to factor in the increased tax liabilities, for example, that individual may have.
Okay.
And we have seen lenders go up to even a little bit above that in times gone by. So it's not static across the market. It is generally the same across all the lenders, but there are some lenders out there that apply their own rules. Yeah.
And is it it's cheaper if you take a 5-year fixed rate, for example, because that's what it is in the residential space? Is it similar in the buy-to-let space as well?
Pretty much so, yeah. So we will see ICR, so interest coverage ratios, being applied on pay rate for 5-year money.
Right, okay.
And in very simple lay terms, if an individual through a limited company is seeking, say, higher levels of lending, it only works on a 5-year.
Yeah.
Because it's stressed at pay rate.
Yeah.
Lenders will charge on 2-year money the 2-year rate with a margin above, which makes it very difficult to get to the high levels.
Yeah, it's the same in the standard residential world that I operate in. Yeah. So I want to be a landlord. What sort of costs, what additional costs do I need to consider if I'm coming into the rental market as a landlord?
Okay, so when speaking to, say, lesser experienced or new entrants into the property investment market, we'll have conversations around typical fees, costs involved. You've got management fees, so solid property agents, will charge fees, and they're often worth the weight in gold. So that's something that we would advise the lesser experienced landlord to work with a good reputable agent. Rental void periods is another thing that's quite interesting. Whilst a landlord might not consider rental void periods, we regularly sit and discuss with landlords having, say, a small amount of money's held at the side in the event that there's either a 2 or 3 month stopover period in changing tenants. All those unexpected costs, the boiler might go.
Yeah.
There might be some damage to a lock, quite an expensive door that you wasn't aware of when you bought the property. And annual costs, accountancy. Accountants will, in the limited company space, file your accounts. So there's a fair amount of work there that needs to be carried out by suited professionals.
And additional stamp duty as well
Yes.
when you purchase a property. So there's a whole range of things to consider. I just want to pick up on something interesting you said before, which was around you've seen a lot of landlord to landlord transactions. Now that's really interesting because a lot of government policy has been around bashing landlords. So hopefully the amateur landlords will not increase their portfolios. They'll sell, and they'll sell to first time buyers. But actually we're seeing, and I think you alluded to it, you're actually seeing some of those landlord sales are going to the professional landlords, and they think there's a bit of a opportunity at the moment going forward.
Definitely. We've spoken on this before. There's pockets of the UK, namely university towns, for example, where residential properties have been converted into, say, small HMOs. These are great.
And HMOs is
a house of multiple occupancy.
Right. Okay.
Okay. So these are typically let on a room by room basis.
Yeah.
In the university towns, say either on a calendar year or a term year, and those properties are perfect for either an experienced landlord not wanting to absorb the cost in converting that property, or to the lesser experienced landlord who are looking at different avenues of investment. So they're stepping away from the traditional AST model, which we've seen over the last 2-3 years with investors wanting to go into the more complex area of the market and ascertain those better returns.
Yeah, so that's why they're doing it. So the professional landlords are looking at maybe up north where there's better returns because the prices are cheaper, or the HMO is quite interesting because I guess that yield for the landlord is much higher. And are lenders coming to terms with this shift? Are there good options available now for people looking to do that?
Oh yes, plenty now. We've seen over the last 18 months lenders come to the market with suited products for first-time landlords who want to operate HMOs. Yeah. And typically in the past, say prior to the pandemic, lenders would only lend to what we call experienced landlords. So they would need to evidence that they've let property out for 1 or 2 calendar years to then deem them acceptable for that type of product.
Yeah. Okay.
So it's interesting that lenders are now supporting those first-time landlords in that space because investors are looking at those spaces. Yeah.
I find this market really interesting, and what's always bugged me is sometimes how governments sort of poo-poo this area, because it's really important that we have a strong private rental sector, and we've got to remember, I guess, and I've dealt with landlord clients over the years, and I haven't met a bad landlord. And some of the stories in the press will make you think that all landlords are bad. But typically, the professional landlords you deal with, can you paint a picture of your typical client and the types of things you deal with them?
So we work with some very strong landlords. And what I mean by strong is, they're empathetic to keeping their properties in good condition. And primarily, that's for the tenants. But also they're aware of their obligations of a landlord within the community, and also within the lending space. They know lenders will support them, and they do not want to be a landlord in a clickbait article, which is very quickly defined by typing their name in Google to say
that's a really good point.
They've breached, licensing regulations, or their properties are infested with damp. And we've seen that only recently with, I think, one of the MPs whose personal portfolio was highlighted as having an infestation. These articles very quickly get sent around the
media.
And
lenders do look at this stuff now.
We've had lenders in the past who, as a part of their underwriting checks, will Google a client.
That's really interesting.
And we've had some landlords, throw up some surprises on an article 4 years ago where they were in breach of, say, HMO licensings, or didn't have any, or there's some negative press around them. So, but on the main, if not 99% of the landlords we work with are brilliant to work with. They're organised and they're aware of their obligations and care about their tenants.
Before 2008, 2009, I saw a lot of big landlords would deal directly with lenders, and then when lenders pulled out of the market, then they started to engage more with brokers. How are you seeing that now, and why would a landlord who's got, say, 20-30 properties actually come and talk to you as a broker when they think, oh, I can just pick up the phone to my bank?
That's a really good question. We see
Thank
this
you.
now. We see it. We do see this now and then. And what you'll find is, so these larger portfolio landlords will typically have relationships with their banks or individuals within banks that they can pick up the phone to. That's great. But they don't have that breadth of product choice that we have. You know, we work with lenders who are broker only, for example. You know, if you're a landlord and you want the best for your portfolio and ultimately your business, I think it would be quite short-sighted not to work with somebody like ourselves who can speak with a wide range of either traditional buy-to-let lenders, complex buy-to-let lenders, and now even the challenger banks are stepping in to support these types of landlords, which is really good. And again, these are all broker-only lenders.
Yeah. And I guess as a landlord, you don't know what you don't know.
Exactly.
And actually getting that breadth of knowledge, I know because I listen to you sometimes, and I learn so much from the type of stuff you're talking through with your clients, and that's really important. So I find that really interesting. And also, so what is interesting now? I've got some stats. I actually got some stats here. So I know that 50% of landlords don't have a mortgage. 50% of landlords don't use a lettings agent, and quite strikingly, 70% of private landlords are apparently over 55 years old. Are you seeing a new breed of landlords coming through? Are they more tech savvy?
100%.
They really understand what they're doing. Is it what's the difference? I know you're smiling, so that's
We
thing.
see it a lot. I mean, definitely the average age of a landlord is coming down. We're seeing younger generation seeing property as a good investment, having seen, say, their elders in their family having bought property in the past.
Yeah.
So they're seeing it as a good avenue to invest into bricks and mortar. They're definitely more tech savvy, and we see that with the tools that they use and how welcoming they are of some of the tools that we use.
Yeah.
You know, we use systems and automated valuations, the portals themselves that we work with lenders, which allow us to work on and also integrate the journey with the client is really important as well. Some landlords we'll work with who are just pen and paper, which is fine, no problem with that. You know, I don't mind that as well. But at the same time, there's just been an evolution in the adaptation of technology into the whole lending process. And it won't be long before the conveyancing process picks up on it. And I know that's there. I know that's there. And
that's an industry problem we're all working on at the moment. I won't hold my breath on that one, but it will change, and technology is quite interesting in how it's coming in to change certainly the buy-to-let market and properties as a whole. I just before we end, I just want to ask about the whole green agenda.
Okay.
So the last government sort of abandoned plans to have all rental properties A, B or C rated by 2030. It looks like this new government are bringing that back.
Yeah.
Are landlords aware of their responsibilities and aware of this? And are you starting to see landlords become more green savvy and maybe start to raise money? Because, you know, if you've got a big portfolio, actually, I guess one of your skills is you can look at that portfolio, raise money to help them meet those things.
Definitely. One of the first things we do when a client's approaching us with a new purchase is ask for the address. And that's not for the purposes of having a look on Google, which you need to do anyway to see if it's adjoining commercial or if there's any nuances we can see, but to look at the EPC register. You know, that's something really in the past you wouldn't have focused on from outset, but lenders are so supportive of the government's plans on increasing private rental sector in that they actually give green products. So if you've got a property that's A to C rated, you will see a discount on your borrowing rates.
Right, okay.
And that can add up over a 2 or 5 year term. We've got some lenders also that will do refunds on completion by way of a cashback, which is, you know, showing their will and intent to improve the housing stock in the market. And maybe for another day we can talk about how landlords are refurbing properties,
Yeah.
obtaining those A to C ratings, and then putting them onto buy-to-lets.
Yeah. And
That's
I
really
think
interesting.
you'll probably start to see more of a tenant demand for those
yeah.
ABC rated
Yeah, they're there.
properties rather than the
Well, what's also interesting is there's a lot of stock out there that's let, say for example, like I think of one that we've done recently, it's grade 2 listed down in Southampton, 22 units. The EPC can't be improved
right
because
that's
of the structure of the
interesting.
property
Yeah.
and the changes that needed to be done. So it'd be interesting to see how the government are going to deal and tackle with those types of properties, because there's a lot of them out there.
Mm. Well, I think we've covered a lot. So any last tips or messages to anyone who's
What I would suggest is anybody interested in either restructuring, refinancing their portfolio, one of the biggest conversations we have at the moment is, can I or should I move my properties from personal ownership into limited company?
right?
There's been huge tax changes over the last 5 years that have tapered themselves in to now where a personal landlord cannot offset any costs,
Yeah.
which can leave some landlords running at an operating loss. Have a chat with us. There are ways to move them into limited companies. Yes, there's transactional costs, but with the right tax advisors, there are appropriate ways in mitigating those, and qualifying criteria need to be met.
Yeah.
But again, talk to brokers before you do anything. It's easy to find a property, but making sure you've got the right lender and broker behind you is really important.
Yeah. Okay. Well, thank you very much, Narinder. Thank you for your time.
No
I
problem.
found that really interesting, as always. I always do. And thank you all for watching. If you do have any questions or any comments, or you want to ask Narinder anything, then do please get in touch, and we'll make sure that that all your questions are answered. But until next time, let's see who's next on the Coreco Couch.